Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night. And I heard the spring is sprung up in New England. I heard it's like 85 degrees. I'm talking to my daughter. That's summer, man. Pretty good. This quote by Barbara Kingsolver. Hope is a renewable option. If you run out of it at the end of the day, you get to start all over again in the morning. Isn't that a beautiful thing? Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow up to 82, NASDAQ up 25, S&P's up 10.5. Gold contract down $7.20, trading at $1,183 an ounce. Silver off 20 cents at $16.30 an ounce. Platinum down 13 at $1,131 an ounce. Light sweet crude down 214 at 58.79 a barrel. Bonds, we had the 10-year down, 10-year up 8 ticks at 127.11. That had rejected lower price this morning. Has volume, though. What does that mean, folks? That means we're going to get a bounce in the bond market. I suspect tomorrow you'll see it go higher, and we'll see the volume start to contract. It looks to me like that top is in on bonds. And if that's the case, man, that is going to be the longest bull market I've ever seen. That's a 34-year bull market, folks. That bull market started in 1981 when rates were 14.5%, goes down to zero. Bottom line, you're in a bond fund, get out. That's the bottom line. Don't even think about it. Just get out of the fund. If you want to own bonds, great. Go to the Treasury Direct, buy them off Treasury Direct. Why? What the difference specifically is that you have the bond in your hand, you get your interest payment in your hand, you're going to get your principal back. End of story. If you're in a bond fund, when I say $127.10 on a 10-year, you're paying $127 for a $100 bond. What do you think happens? The price gets destroyed, folks, on the way down. Big destruction. 30-year bond, $155.28. It was up 1 point plus 18 ticks. Same setup there. What does that mean? That means you're paying $155 for a $100 bond. If rates have bottoms, which they're at zero, so bottom line is that, yeah, can you go negative? Yeah, Europe went negative, but guess what? Europe's back into flat now. What that means is you're paying $155 for a $100 bond. Now, what happens when rates go up? Those get croaked. Treasury Direct, same type of setup. You got it in your pocket. You're going to pay the price. You're going to pay 100 cents on the dollar. That's what you pay for a bond, folks. And you get a smaller rate, but as rates go up, if you're going to do something like that, you want to be in the bond market, what you're going to want to do is you're going to want to ladder the buying of the bond structures. That means just whether it's every 4 months, every 6 months, you invest, you buy the bonds, you ladder them. What will end up happening if rates continue to go up, let's say we're at the bottom of it, rates, let's say, start going up 6 months from now. Bottom line, if it's quarter point rate hike at a time, guess what? In the next 2 or 3 years, you'll see the rates go up 2%, 3%, whatever that is. Bottom line, if you ladder them, you're going to get that average price of them. But the real key is, which is absolutely crucial, if you're in that market, you want to get your principal back. Bonds funds, you're not going to get that principal back because the bond funds are going to get whacked extraordinaire. In fact, I heard a interview today with on CNBC. Tyler was interviewing the head of structured products, mutual funds at Schwab. And bottom line, the guy was saying, oh, I don't think it's going to be that bad. He's out of his mind. Absolutely out of his mind. King dollar. King dollar was up 550 ticks at 94.72. The euro was down 77 at 112. And the yen trading up 31 at 119.78. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, guess what, folks? We get a nice dead cat bounce. And what I expect you're going to see is this. Now, the market is so deviant, folks. It's so cool. It's awesome, okay? And what I mean specifically is this. You're up 83 cents today in the SPY. We had come down yesterday, and we came down hard yesterday once again. You come down with 135 million shares. Today, you go up with 85 million. Tomorrow, the jobs number's coming out. What I expect you're going to see, it's going to be a bad jobs number. Why am I saying that? Well, the ADP report come out, which is a pretty good indication where jobs are coming. That came out Yesterday, under 200,000. So that's saying, hey, you're very well going to get a bad jobs number. If you get a bad jobs number, you think the market go down? No, the market will continue to bounce. Why? Because the market will basically figure that, hey, interest rates are going to go up later. I want to bounce a little. You get a Friday, all of the above. You'll see that bounce. I suspect that bounce is going to come on light volume, and then see you don't want to be in next week. That's how this is, I suspect, is going to shake out. That's in your S&P. We go over to the NDX 100. We use the 3 Qs for the NDX 100. Same type of setup inside the 3 Qs. 3 Qs out here goes down hard. We get into the lower range. The lower range inside the 3 Qs is 109.42. You're at 107.35. We did volume today of 29 million. We went downtown yesterday with 42 million. So we'll get a bounce. Bottom line, you see anemic. Now, this is setting up a beautiful ABC structure on the way down. The price point will go after this 104.23. Small caps. We use the IWM for the small caps, and you'll see it inside the small caps. And you got to remember that the small caps led off the charge on the way down. They came down with thunder. They went from 126, the IWM, down into 120. We bounced today, the IWM, with 28 million shares after going downtown with 72 million. You can see where the force is. The force is absolutely downtown. Gold. What do we have with the gold contract? Gold's always awesome coming into a Friday. When I say awesome, it's like hold on to your seatbelts, because coming in on a Friday, volatility is out there in spades. Now, this is what we had in gold contract today. We did 126,000 contracts. We pulled back. We're down 740. You're going into 213,000 contracts. So that, to me, is building cause to go up into this 1224 area. So the gold contract, let's go over to silver. So silver is the exact setup, the exact same way. What we have with silver, and both of these, by the way, haven't been able to get out of the way. And they particularly haven't been able to get out of their way when yesterday the dollar index was down over 1,000 ticks. Today you're up 500, but bottom line, it was down on over 1,000 yesterday. Still couldn't get out of its way. Believe it, that is deviance extraordinaire, but that's the type of deviance that says markets want higher price. I know it's sick, folks, okay, but that's what they like to do. What I love seeing is that it's so far out of whack like it was yesterday. Because when it's so far out of whack like that, you have the shot that it absolutely makes no sense. When it makes no sense on a fundamental basis, but on a technical basis, it's the setups there, which we have both in the gold and silver market. That is the ultimate, because when I say fundamental versus technical, when the dollar gets weaker, all commodities are going to get stronger. In particular, gold and silver are priced in U.S. dollars across the world. Silver. Silver's down 20 cents today, 35,000 contracts. 35,000 contracts is going into 42,000. Silver also wants higher price. Now, let's go take a look at the TLT. The TLT we use for the 20-year bond fund. The TLT bounces out here today. We bounce with lighter volume. It looks like the TLT is going to set up a monster ABC structure on the way down. Now, this is a total change in dynamics inside the bond market. We've come off the high twice. The high in the TLT is 138. We're at 122. You've had 2 legs down in the market thus far. Both legs have volume on the way down. The only day that we had volume on the way back up was March 18th. It didn't hit a swing point. You did get the volume in it. We'll see whether they get any volume on this bounce. I suspect we're not going to get any volume, number one. And I do expect that you're going to see a decent bounce out here. It doesn't have to be huge, but it'll be a decent bounce. I mean, the TLT can bounce to like 124.10, somewhere up into that area. Now, King Dollar. Let's go take a look at King Dollar. What did King Dollar do? What King Dollar has done, folks, is this. King Dollar got into lower lows, blew out the swing point, monster volume on the move. Where today we go up, and you go up with 565 ticks, 43,000 contracts. King Dollar is building cause to get into the 94, 92, 89 level. King Dollar is done, folks. King Dollar topped out in March 13th. You stay right there, folks, and we'll be coming back with a lot of numbers. We're coming back with our man, Mr. Andy Heck. We'll be right back.